The Money Show
on 702. Let's walk the talk.
On 92.7 or 106 FM and DSTV channel 856.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Very good evening to you. I'm Jane Dutton. I'm in for Stephen Grootes. So hope you're having a wonderful Freedom Day Take 2. We briefly turn our gaze away from the Basilica in Rome and the pomp and the ceremony on display after the death of the Pope and his days of lying in state. Today we hear that the conclave will start the process of choosing the new Pope on May the 7th. So while we wait for the black or white smoke that will suggest whether or not there is a new Pope, we can turn to the red flags and any other developments that will impact our lives and our pockets. Our thoughts go out to those affected by the multiple fires on Table Mountain, staggering the emotional and economic impact of those flames, something we see every year. As News 24 said, stakes are high as we see the squeeze in beef prices, which is having a dramatic impact on the price of meat and, of course, our baskets. It's a tough one, being the meat-loving nation that we are. A bank legend has died at a very early age. We'll talk about the impact Errol Kruger had on the sector. Also, what can we do to protect ourselves from rising cybercrime? And a trade dispute has been resolved between South Africa and Tanzania over bananas. But with a global US tariff war, we ask, can bananas save us from the orange? Give us a call on 011-883-0702. Tweet or X us on @Radio702. You can send us a WhatsApp message on 072-702-1702 or 021-446-0567. You can call that number too. Also at Jane Dutton.
Walking this talk together.
Every hour.
Every day. This is 702.
Let's walk the talk.
So we're seeing beef prices skyrocket amid cattle and feed crisis. And I'm going to be speaking to Thabile Nkunjana, agricultural economist, about the impact of high cattle feed prices and a shortage of slaughter-ready cattle on beef prices affecting local supermarkets and butcheries. And obviously, this is really bad news for braai masters. And I'm going to be asking Thabile, a very good evening to you, a little bit more about this crisis and what is it that we're seeing?
Good evening to you and the listeners at home, and thanks for having me. So there has been a couple of issues that are led to this. One, we are coming from a season that negatively impacted South Africa's agriculture at large, mainly on grains, and that's a key component for the sector. So that's part of the issues, and recently we are having, lower numbers in terms of those that are getting into the commercial abattoirs. So those are some of the things that are leading to the crisis that we're seeing now. Yes,
this shortage of slaughter-ready cattle. How is that playing out, and what are farmers doing to circumvent that?
So basically, we do normally have a number of, a little bit of a decline in commercially livestock production or slaughter early in the year, because farmers are coming from a higher slaughtering numbers for the festive. So we generally see that. And then once we have the situation where we had the drought that negatively, impacted the feed, the cost, that of course is going to be somehow sort of limit some of the farmers to bring their animals, because some animals are not really ready for the market because they are not getting, the proper feeding ratios and other things. So that, of course, it tends to have a bit of a spillover to the overall, supply in general. But those are some of the issues. But
we're seeing a staggering increase, excuse me, interjecting, of feed prices. It's up in some areas by 30%. That's not sustainable.
Yeah. Of course, I must remember, these things within the agriculture sector, they take time. For instance, if we are to see what is happening behind the production part of things, there's a lag period that you'll see and the same applies for food inflation generally across the country. So there's that period, it comes, and then eventually it begins to show. And then once it is there, to show, it takes a bit of time to, of course, get to be, back to the normal levels. And also that is based on how much, what is happening in terms of the feed supplies, and then of course the weathers that have over some time negatively impacted, the production. But it should be there, but not to a very long period. And also given that for now we are anticipating a greater production for some of the grains. But the issue now, it is the rain that we are seeing that it looks like it's going to probably bringing some negative, developments, which we are hoping is not going to be that extent of the drought that we have seen to the previous season.
And what about retailers and how they balance this out?
So for the retailers, of course, this is always going to be something, because remember, the certain numbers that you're talking about, they are at a commercial level. And those retailers, they normally get to, be supplied by, because of the issues in terms of the traceability of the products that gets to the retailer. So therefore, what is happening at the commercial level in terms of abattoirs supplying and slaughters is going to definitely get into the retailers, shelves. And as a result, consumers are going to probably see a little bit of an increase, or at least some sort of a difference in terms of what they normally pay for their products around this typical time of the year. But it should not be something that we should be very worried about now. But of course,
is there a way to better prepare for something like this? We know that extreme weather is a thing; it's not going anywhere.
So not really. Remember that agricultural sector is a very sensitive sector in general. So therefore, to say and it's always going to be prone to issues like climate and rain related, and anything that has to do with the weather. Therefore, we cannot really say what is going to happen. But we are hoping that as far as the weather is concerned, it clears up. The damage that is on the ground will not be as severe as it is. Looking to be in some areas, but generally still things that are not looking so bad. But of course, once everything clears down and then the whole situation has been assessed, then that only when we can be able to make judgments based on that.
I'm hearing it won't get much better until the third quarter, so everybody just brace themselves for this period. Thabile Nkunjana, agricultural economist, thank you very much for your time.
Thanks for having me. Cheers.
Because this journey is better taken together.
Let's walk the talk. 702.
We're talking about a financial institution fined over the use of finfluencers. And I don't know if you've ever heard of that term before, but I think you should familiarize yourself with that because they've come in and hit the sector in a big way. I'm going to be speaking to Maya Fisher-French, personal finance journalist at Maya on Money, about the 700,000 Rand fine imposed on African Bank by the Financial Sector Conduct Authority for a misleading social media advert that referred to a personal loan as an investment. Good evening, Vaya. Elaborate on what went wrong. What was misleading?
Yeah, so in the text that the influencer said on social media was a video. She basically said, she said it in Sesotho, but she basically said, this is not a loan, this is not debt, this is an investment. And she was talking about, she had been paid to promote African Bank loans. It was part of a campaign that African Bank was running, and they had many social media posts done. They were engaging with many influencers to promote their products. And, it appears that this particular video wasn't correctly checked before it was flighted, but the FSCA took exception to it, and they had received a complaint, and they said this sounded very much like misrepresentation of the product, and as a result, they have issued this fine against African Bank, of which 500,000 was paid immediately, 200,000 is suspended as long as they maintain or stick to the code of conduct, standard of conduct.
Okay, so, how should these influencers then behave, for example, when they're using hashtags, for example?
Well, I think there's a few aspects to it. One is that this is starting to show that the FSCA is looking closer at social media posts by influencers. And this is influencers are used by all industries, right? It could be somebody, promoting shoes or cars, but where the FSCA is concerned is that when it is being used to promote financial products. Financial products are not a pair of shoes. They're not a car. They have big financial consequences.
That's right.
So if they're not properly represented, if people do not understand, and the question about hashtags is another important one, is that anyone who is paid to do a social media post has to put according to the Advertising Regulatory Board, has to put the hashtag ad or sponsored on, so that the consumer or the person, seeing that information understands it was paid for. That this is not a promotion or a personal recommendation by the influencer, but they have been paid for that. And that's another huge aspect that I think we're going to be definitely seeing a lot of focus on going forward.
And the implications of Africa Bank's fine for other financial institutions using social media, and tell us more about finfluencers rather influencers.
So I think what's important with this is that it is highlighting how brands need to be very careful about how they're using influencers, to be very careful about the text or the videos that are going out, and make sure that they are ultimately, the brand is the one who's going to carry the responsibility. So I think a lot of them are going to be checking the T's and C's of their contracts a little bit more carefully, and I think that's a good thing. I think it's important that everyone understands it, and hopefully they'll also start to remember that they're supposed to have hashtags and all of these things. And I think, there's a bit of a nuance between an influencer and a finfluencer. So your influencer would typically be a celebrity that, you could be, Jane. You're a celebrity, you're well known, and you could be promoting and paid to promote certain products that you would be perhaps, although mind you are in the financial industries, maybe you're not the best example, but an actress, for example, would be a celebrity influencer. A finfluencer would be someone who focuses their entire social media profile and is focused purely on finances. So they would be, they can be like myself, a financial journalist, you have financial advisors, but you get people who are also just using their platforms to educate people around finance. And those who are specifically named finfluencers. And the FSCA is looking at all of this. They're looking at a finfluencer. When is that bordering on advice? Is what they're saying accurate? And then they're looking at influencers or finfluencers being paid for posts, and is that correct? Does the people consuming that information understand it's being paid for? So I think there's a lot going on in this space, but definitely a spotlight. And I think we're going to see more and more of these sorts of scrutiny around social media going forward, which I think can only be a good thing, because I think, unfortunately, there's a lot of misinformation on social media. So, if you hold the brands responsible.
We saw the Joburg mayor allegedly doing it, right, and being accused of spending state funds on influencers to convince residents that his administration was working hard, and they know how, you've got a targeted audience here, so you can see why it's a popular way to go.
Absolutely, and then when you're lying and pretending that those posts are not paid for, that's actually going against the law.
Maya Fisher-French, personal finance journalist at Maya on Money. Thank you very much for your time.
Because this journey is better taken together.
Let's walk the talk. 702.
So I'm going to be bringing Deon Grootes in. He's the Chief Investment Officer at Credo, about the passing of Errol Kruger. He's former Registrar of Banks and Nedbank board member. He's passed away at the age of 67. That's really young. And he's widely respected for his contribution to strengthening South Africa's banking sector. Very good evening to you, Deon. And I'm sorry, I believe he was a friend of yours.
It was, Jane. I got the news yesterday morning. I got a call from a mutual friend who shared the tragic news, with me, that it happened the previous evening. I've known him for about 10 years. So, yes, it certainly is quite a big blow.
He's a young man, but he did a lot in his time.
He certainly did, and he had a model career at the Reserve Bank, starting there as a relative youngster at the age of 21, and then spending, I think, more than 30 years there until he took relatively early retirement, soon after the financial crisis, actually. So not many people today have service of, I think in his case, was 34 years at any one employer, and he certainly saw lots of change over that time, and he was very effective towards the end of it in terms of implementing important regulation at the most important time going through the financial crisis.
Tell us about that. What was the most important contribution he made?
Well, I think for those, let me take a step back. I'm not a banking expert as such, so the knowledge I'm going to share tonight, or the bullet points I'm going to share tonight, come from general knowledge as opposed to sort of detailed banking knowledge.
Sure.
But if you look at the banking industry over the last 20 years or so, a lot has changed, and a lot of that is ascribed to the role of the Basel Committee on Banking Supervision, obviously based in Basel in Switzerland, which has been operating for quite a long period now. But the big changes they made came in the early 2000s, and it came in waves. We had so-called Basel I and we had Basel II. And Basel, with every wave, the rules essentially got stricter and went further. And Basel II was effectively announced from memory slightly more than 15 years ago, certainly before the financial crisis. And I think what Errol got right and what the South African Reserve Bank got right very early on was to bed these changes down in terms of their processes, in terms of the rules and regulations that they promulgated that the banks had to adhere to going into the financial crisis and ultimately getting through it. And I think, just to summarize, there's a tribute that I saw to him specifically, that there were only 3 countries in the first world, if you like, the developed world banking system, that survived the global financial crisis unscathed in the form of no banking bailouts. And that was South Africa, Australia and Canada. We saw multiple bailouts in America. We saw them in the UK. We saw them all over Europe. But South Africa came through unscathed. And as I say, he certainly deserves a lot of kudos for that.
And as you say, I mean, somebody keeping a job for that long, and when there's so many changes, whether it's in the banking sector, whether it's a global financial crisis, whether, political changes, I mean, you've got to be rather astute and you've got to have a good nose for projecting and imagining what's going to be happening, what's happening on the horizon.
All of the above, Jane, but I think you should add one more thing, and that is you've got to have a real sort of a backbone. You've got to stand firm, often in the face of adversity or counter-argument. Yeah. So even though I'm singing his praises tonight, I can tell you that at the time he was probably not the most popular person either. So if you had to get the CEO of a bank in South Africa from the year 2009 or 10 online tonight, I'm sure he would be giving a positive review in terms of what Errol did, in terms of his work. But I can tell you they probably didn't like him that much because he was putting his foot down and insisting on compliance and sticking to rules at a time when it was very difficult to do so. I can go further and say that I'm aware of 1 or 2 specific stories, the details of which I cannot share because of confidentiality, where some of the majors wanted to do certain expansionary moves, which Errol effectively stopped because he thought it wasn't a sound business idea at the time, given the risks and given the effect on things like capital requirements. So he certainly didn't trade on popularity, and he was happy to be the unpopular guy doing the right thing.
Yes, I was going to ask you, but you've answered that question. To be good in this sector, do you need to be liked as well? Does it help?
Exactly. I think he was generally liked, and for those of us who can count him as a friend, he was a very charismatic person, and he was easy to like. But I think when he was doing his job, the job of a regulator is not to be popular. The job of a regulator is sometimes to do the most unpopular things and to make sure that the rules are followed. And that could be a challenge at times, especially when the system is being tested like we saw in the financial crisis.
He didn't just focus on South Africa. He was appointed by the board of the Qatar Central Bank to serve on Qatar's Financial Stability and Risk Control Committee. What impact do you think he had there?
He had a huge impact. Essentially, when he went to Qatar, which is soon after he left the Reserve Bank, so that's about, I think, 13 years ago now, 14 years perhaps, Qatar was already setting itself up as, the next financial center, and certainly one of the leading ones in the Middle East today. But their regulation at the time was patchy, and they knew that, which is why they were looking for somebody like Errol. They did a global headhunt, focusing on some of those countries, to my knowledge, the ones I mentioned before, Australia, Canada, and South Africa, where they knew that people had good experience and a very good track record through the financial crisis. And he ended up, winning that race, getting the job on a 5-year contract basis. And effectively, he set up the regulations in that country. As I say, I'm not saying there was no regulatory framework, but in terms of all the capital requirements, liquidity rules, operational risk requirements, all the reporting that goes with it. That's exactly what he'd done in South Africa in the previous sort of 5 or 6 years. And he took that experience with him, and he imparted that within Qatar, served his 5 years, imparted the knowledge to get a local successor, and then left and went back to Pretoria.
You know, I lived in Qatar for 13 years, and the regulations were often missing, and people had big problems with banks, with private investors, because those regulations weren't there. So I should imagine that must have been a real tough task, and also, you know, that with the cultural differences.
I think it was. I mean, I got to know him towards the end of that. I was introduced to him. I should just share this very briefly. I was introduced to him because of a mutual love of Arsenal. He was, you know, never having lived in London, he was an Arsenal season ticket holder for decades. Yeah. And he had a few season tickets. He would have been at the match tomorrow night at the Emirates, and I would have been sitting in the block next to him. But that's why I was introduced to him. But I met him just as he was leaving Qatar, and he was quite happy to leave, to be honest. I think he realized that was going to be his last formal job. He was ready to take up the role at Nedbank, which we haven't spoken about, but you know, to impart that knowledge at a more sort of distant level and do all the committee work there. So yes, I think he was happy to serve, but after 5 years he had enough.
Ready to leave. And his next job, what you knew about it?
Well, as I say, he went to Nedbank as not only a director of, I think, the main board and some of the subsidiary companies, but also doing lots of committee work. And if you knew Errol, you would know that he was a stickler for detail. So things like risk committees and governance committees and the like. I don't know which committees he was on, but certainly things like risk and audit, perhaps. He was exactly the kind of guy. He was the kind of guy that sweated the detail more than most. I have tremendous respect for that because we had a similar background academically speaking, but we had different personalities. I'm more of a big picture guy, but he was certainly a guy that sort of added up the columns and made sure that there was no mistake.
So big shoes to fill. What are we looking at with new dynamic talent coming through?
No idea. Bear in mind that from a South African point of view, I think, those shoes have been filled for, 14 years since he originally left. Just looking at the way that the banking system has operated, without me knowing the characters involved, I would imagine they are doing a good job because our banking system has always been well organized and highly respected for that.
That's right. Well, for a man who says he doesn't know much about the banking system, that was very informative. Deon Grootes, thank you very much for talking to us. And again, I'm very sorry about losing your good friend.
Thank you very much.
Walking this talk together.
Every hour.
Every day. This is 702.
Let's walk the talk.
We were talking a little bit earlier on about Africa Bank's fine 700,000 Rand for using Finfluencer, who distorted a message and the sort of impact that it has on us. Harry Mongolis says insurance companies do it all the time. I think phone companies do it all the time, but maybe it's a little more insidious having an influencer who you trust telling you something that is not necessarily true. Send us your messages. You can call us on 011-883-0702. You can also WhatsApp us on 072-702-1702. I'm Jane Dutton. I'm going to be bringing in John Jack, CEO of Galetti Corporate Real Estate, because I want to talk about South Africa's commercial property and how it seems to be showing resilience despite political uncertainty and global trade pressures. Jack is highlighting a 2024 rebound driven by lower vacancies, stronger investor appetite and rate cuts. So, John, it's looking not too bad for the sector.
Not too bad, really. I think there's just a little bit of stability. We saw the worst, and effectively what we've seen is a lot of return to the sector, and people are looking for stable return, and everywhere else in the market they're not getting that. So, yeah, it's giving us a tailwind.
But why is it stable there and not anywhere else?
Because property is long-term as an asset. So typically the commercial leases are signed 3 to 5 years, even plus sign up to 10-year leases. And where you've got this sort of stable 10-year lease, given that it's a stable covenant, it needs to be a stable tenant at the same time. But that lease effectively just continues to escalate and escalate and escalate. And as long as that tenant's paying their rental, effectively you have a locked-in return. And so that's the kind of stability that it'll take us, when we start talking 10 years, at least it takes us through the next 2, 3.
But what do you think is driving the stronger investor appetite? Obviously stability, but what else are they looking for?
Yeah, so I mean, obviously it's just running away from volatility in the market. So you've seen strength in gold. Everyone's, looking for stability in the market, and they see danger everywhere. So basically they're trying to move away from volatility. We've seen such fluctuation, even in Nvidia, which was such a darling of the New York Stock Exchange. Basically that's collapsed almost 30% in the last couple of months. But commercial property, effectively, you're seeing this sort of stable yield, as it were. At the same time, you've got these vacancies that have been taken up in areas like Sandton. You've got a lot of call centers because we've got a weaker currency. Lots of global call centers moving into the country. I mean, a staggering amount, actually. Over 100,000 square meters in Cape Town in the last 18 months, which is a number. It's a big number, yeah. And so really that takes up all of the supply in the market, and then you don't have any more supply, and that means rentals go up. So that's really what's driving the underpin.
Just win-win. So it sounds that people are going back to offices, right, after we saw them leaving them after and during COVID. So it seems that the office space is the way to go.
It's industry specific. So if it's a tech business, no, they haven't returned. So, you look at banks. Banks have a large number of, engineers. These are tech engineers, coders, et cetera, in that business, and they don't want to go back to office because effectively they don't work normal office hours. But everyone else, anyone in a sales business, an architecture business, any of these type of businesses, all of them have returned to offices for sure. So it's really the tech guys. The tech guys are not there. They like to work at 3 a.m.
Okay, most people are locked in, but what could threaten this market? I mean, we've got a government of national unity, but we know the problems there. We're seeing a dramatic rise in cybercrime. What sort of impact could that have?
Yeah, so I mean, effectively, in property, the biggest issue is sudden vacancy. So when you weren't anticipating a vacancy, or alternatively, you have a vacancy and there's very little growth in the economy, which is something that's being projected. So, where economists were projecting, and the MPC was projecting at least close to 2% growth, now they're close to 1%. And that lack of growth in the economy ultimately means there's no additional take-up of space. So if you have a persistent vacancy and you're sitting in a B-grade office, for example, B-C-grade office, and you have a persistent vacancy, you're not necessarily going to find a new tenant to take up that space. So that's the risk. If you have a vacant space and there's no real growth in the economy, you're not seeing more people employed, et cetera, people don't need a net additional office space. So that's the problem. You go vacant, you got a problem. You got an unexpected vacancy, you got a problem. And so that's the risk.
What do you think we'll be seeing here in this sector in 5 years' time?
5 years' time, wow. It's been quite dramatic over the last.
What do you paid month by month?
Yeah, I mean, I would say in 5 years' time, you're going to see more development in the office space. So even in the next 2 years, areas like Cape Town and Natal, for example, you're going to need additional office space because people require that sort of office space, but office space that's efficient. So office space that doesn't have a high power utilization and that type of thing. So greener offices. We're seeing these AAA P grade offices with very low vacancies for that reason. The older offices you can have massive power bills. So you can have 50, 60, 70, 80 rand a square meter just on your power, whereas in the newer offices it's closer to 20. So you can imagine when you add it all up, you want to be in a newer office. So I would say we're going to see the development of new offices. Can't believe I'm saying that, but in the Cape Town market, you're going to see in the next 2 years, you'll see new office towers going up.
I mean, I was going to ask, I should imagine that the Cape Town market is growing a lot faster than what we have here in Johannesburg.
Yeah, it is, certainly. The supply has been taken up by those call centers, as I mentioned, and that means anyone else looking for larger space, you've got to develop, and that is, in the next 2 years, there will be a new office tower built in Cape Town. That's my bet.
And if you look at the residential market running alongside or tandem with the corporate real estate market, how does that work?
Yeah, well, there's been a lot of reported news, and Lightstone's really good at this because they track movement around the country. Where do people buy? Where do they buy their second home, et cetera, et cetera. And there was a lot of reports of people moving to the Western Cape. And now there's actually been quite a lot of reports of people returning to Gauteng. So I think the residential market in Gauteng becomes underpinned by people both returning back to South Africa and
I think we've lost you there.
Teng. So,
We lost you there for a moment. Yes, I think everyone in the Joburg market is happy to hear about how many people are coming back from the Western Cape. Firstly, it's very expensive. There aren't jobs for everybody, so hopefully that'll push up the market here. John Jack, CEO of Galetti Corporate Real Estate, good talking to you. Thank you very much.
Thank you.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking. ABSA is a proud lead sponsor of B20 South Africa 2025.
I'm Jane Dutton. It's very good to be with you this evening. I hope most of you had the day off and were able to do wonderful things. Obviously, our thoughts go out for those in Cape Town and those horrendous fires that we see every single year. And I want to now talk about a ban on agricultural imports from South Africa, Tanzanian ban. And it seems that it's a ban that wasn't really a ban, a rather intriguing story. So I'm going to bring in Wolf Logan Browder, manager of Agbiz Fruit, about the resolved trade dispute between South Africa and Tanzania. And we heard that South Africa never blocked Tanzanian banana imports, and Tanzania has lifted its ban on South African agricultural products. Wolf, it's very good to have you with us. What do you know about this ban that really wasn't a ban?
Jane, thank you very much. Yes, thank you very much for having me on the show. It's a little bit peculiar, but we are very relieved to have our two governments talking to each other on this. On the Tanzanian side, it appeared to be a case of ban by social media. It was announced on X, and there wasn't a corresponding simultaneous announcement on the websites of the government departments that we could find. So it seems like a unusual habit of trade policy might be spreading, but less there the better. And then I think we find that in response, the South African side reached out and said, look, what can we do to take this forward? But the insistence from the South African government side was, look, we can't negotiate under conditions of a ban when it has not just been justified sufficiently. So the two sides agreed that the ban would be lifted. Tanzanian side said because the South Africans had reached out, they would lift the ban. And so now there's negotiations to see how do we actually resolve the core matter.
And according to some in Tanzania, the country never applied for market access in the first place.
Yeah, the thing with agricultural products, and that goes for animal or plant products, is that you have a real problem occasionally with pests and diseases on both sides. So all countries apply pest and disease investigations and evaluations, and then you have a pest information pack, and you get approval in the end once it's deemed safe. And both sides have to prove that they're not going to be transmitting pests and diseases to the other side. And this is like a deal breaker. It's a red line. You can't export in the absence of such phytosanitary, we call them SPS, sanitary and phytosanitary approvals. So in a way, it's a type of micro trade agreement. You're applying for formal market access. You say, I'd like to sell bananas into South Africa. South African side says, great. Can you prove with scientific documents that your bananas are safe, they're disease-free? Then both sides do the swapping of documents, and when you're happy, the bananas can come in, and you pay, if there's a tariff, you pay a tariff, but there shouldn't be one because we're both members of the same trade bloc, SADC trade bloc. So it appears, and this thing leaves a massive paper trail everywhere for years and years. So there doesn't appear to be any evidence of that, so it's a bit puzzling.
So how good will this be for us here in South Africa?
Well, it doesn't really make a significant difference because, we import the bulk of our... we import the bulk of our bananas from Mozambique, about 74%. My colleague Wandile Setlobo has already put us an article about this saying, in Eswatini it's about 19%, so you're really into the mid-90s, and the rest is from the rest of Africa. However, that's not to say that Tanzanian bananas are not of sufficient quality and a good enough price to have a competitive share in the market. We won't know until they've done the paperwork and they actually enter the market, and they'll have to build up relationships with retailers and etc. So the consumer on our side might benefit from a wider variety of imported bananas, but at the same time very hard to tell because, of course, retailers buy on price and quality.
And bananas aside, how significant is Tanzania as a trading partner for South Africa in terms of agricultural exports and imports?
That's right. That's a good question. Yeah, look, for us, it really is a very small trade partner at present. I mean, it'd be great overall to have a deeper trade relationship. They only account for about 0.5% of our agri-exports. And on their side, coming to us, we account for about 15% to them. So 15% of all the agri-exports come into South Africa, 1.5. So it is a more substantial deal for Tanzania. And on our side, the products that we need Tanzania for, or let's say the products that are exposed to the Tanzanian market are breeding cattle, chewing tobacco, chocolate slabs, and all of those products, they feature over 10% of the export volume goes to Tanzania. And on their side, coming in here, they sell us a lot of oil cake. We're about a quarter of their exports for oil cake, coffee husks and substitutes, tobacco, refuse, and the macadamias and spices. And for all of those products are significant export products for Tanzania into South Africa. So the two sides, there's some commodities where the two sides really need each other, and they need the respective governments to find a common ground and not have any blanket ban. How Malawi and Tanzania sort out their problem is a related issue, because Malawi's banned ginger and bananas and maize, rice, flour. So there's a separate trade battle going on there.
On what grounds?
But yeah, it appears that the Malawian side would like to do it for protecting local producers, in the same sort of sense as we had a disagreement with Botswana and occasionally South Namibia over local production and boosting local production. But the problem is we're all in a trade agreement where we agreed on formal rules years ago and how we would put our tariffs and what restrictions we put in place. And there are procedures that you can follow to say, look, I've got a bit of an emergency here. I'd like to apply for a temporary restriction in this regard. But to announce it on Twitter, on X, to put us on X, is a bit unconventional. We need Tanzania and South Africa are good trade partners in many respects and can form a strong partnership as we in the current season. Globally, we need to be unified as a grouping.
So, what lessons do you think can be learned from this trade dispute? I mean, how can similar disputes be avoided in the future, other than sorting out your problems on X?
Yeah, I think that there's obviously something that went wrong in the communication, perhaps, in the procedures, because this literally should not have happened. There are established processes for asking for market access, and if your access request is denied and you believe it's denied unfairly, then you escalate and escalate. If it's denied on scientific grounds and then the other side has different data to yours, then there's also ways to escalate that even within SADC. You can claim it's a non-tariff barrier. There's a non-tariff barrier reporting mechanism. There's the SADC Council of Ministers, trade ministers. It's a very established trade bloc, SADC, the Southern African Development grouping, and that runs all the way up to DRC and runs west to Angola and east to Tanzania. So there's many processes internally that could be followed, and so it's a bit puzzling. There's obviously something more to this that might pop out in the next few weeks. But as my colleague Wandile has essentially said, it does appear that perhaps there was a little bit, someone moved too fast before the facts were clear.
And I mean, this sort of scene, we don't want to see playing out, considering that we're going to be facing this mass action of attack from Donald Trump. We got to, I should imagine, South African and African countries need to stick together when it comes to trade.
Yeah, no, very much so, because what the American unilateral actions have triggered is a reevaluation of what your trading relationships are like. Where's your exposure, and who are you trading with, and who could you trade better with? And it's quite clear with the African Continental Trade Agreement entering into sort of commercial territory. We've only got a few protocols left on competition and services and trade and services. So we expect that goods traffic will start to move quite well over the next few years. And I think a lot of countries are reevaluating what's their exposure to different markets, including, especially in this point in time, to the US. And the natural outlet for additional trade is in Africa, is between countries that are member of SADC, and then, of course, within the AFCFTA. And in the AFCFTA, when we do submit tariff offers and look at trade flows, the SADC members need to firstly consider how does it affect their own trading relationships, when they're looking at Nigeria and Egypt and Ethiopia, new players, because we've never all been in the same trade agreement. It's the first time in trade history in Africa that all the major engines are in the same sandbox, playing in the same sandbox, so to speak. And we need each other. We do need each other, and we also need to be coordinated in our approach to Africa, into China, because China is making overtures to Africa as a group, as a continent. And it's something that Tanzania and South Africa, I think, can find common ground on and support each other on. And it's a very fluid environment. I mean, we really don't even know by June or by November where the American position will be. And in that type of environment, you really have to minimize any sort of disagreements in the family.
So he might certainly help focus us. Very good talking to you, Wolf Browder, manager of Agbiz Fruit.
The Money Show
on 702. Let's walk the talk.
On 92.7 or 106 FM and DSTV channel 856.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Very good evening to you. It is 6 minutes past 7. Not that I should imagine you care about the time if it's your day off and you go back to work tomorrow. I'm in for Stephen Grootes, and we're going to be talking about a massive threat to business, MTN cybercrime. And it's actually a threat to all of us because often these cybercrimes get access to our data. How bad can this get? In the Business Book Review, The Real Wealth of Nations, Creating a Caring Economics, written by Ryan Eisler. And this shows how bringing the nice into business is needed for a sustainable and caring future. In the How I Make Money section, Saray Khumalo, explorer and mountaineer, will be talking to us about what impact does summiting Mount Everest have on your view of life and money. She will share her successes and obviously the role of failure in getting there. She managed to summit after the 4th attempt. Can you imagine trying to get up that mountain 4 times and doing it? I went up in a helicopter once to film on Mount Everest, and the pilot was ducking in and out of clouds. It was one of the most frightening experiences I've ever had. You can see the enormity of that mountain. So she's going to be sharing that with us. In the last hour, we were talking about how Africa Bank has been slapped with a big fat fine of 700,000 Rand for using a finfluencer to send a message that was corrupted. So we spoke to Maya Fisher-French about what it is that you should be looking out for and what sort of regulations need to get into place so that we don't become victims of that. We also spoke about the trade spat between Tanzania and South Africa over bananas. I'm happy to report that is over. And commercial property sector, it's holding up. That's such good news. And it's holding up because of relative stability in the country. That's regarding the government of national unity and our power supply. So watching this VAT play out with the EFF saying what they are saying, that Nkunjana needs to step down. We wonder what sort of impact that's going to be having on these sectors and business interest and stability in this country. Our guest was also telling us about the staggering growth in Cape Town in the commercial property sector, the splurge in call centres. Talking of calling, give us a call on 011 883 0702. You can tweet us on X, that's at Radio 702, or you can send us a WhatsApp message on 072702 1702, and I'm on at Jane Dutton.
Because this journey is better taken together.
Let's walk the talk. 702.
I was horrified to hear how cybercrime is on the rise. It's staggering numbers. I mean, it's something that we've been watching growing for many years. We've just heard about the MTN breach. That's the latest in a string of attacks. I'm going to be speaking to Jan Vermeulen, editor at My Broadband, about this MTN cyber attack, highlighting the growing threat of cybercrime to businesses worldwide, as ranked top risk by Alliance, and that surpasses issues like load shedding and political instability. A very good evening to you, Jan.
Good evening. It's a pleasure to be here.
What are the top risks to businesses worldwide, according to Alliance?
Well, the threat of cybercrime is one of the biggest, and obviously depends on what kind of business you are. If you're an airline, then the threat of a cyber attack is not just far greater, but the impact of that cyber attack on your operations, like we saw last year, which wasn't a cyber attack, it was a malfunction caused by a rogue update. But that shows you the impact of what an effective cyber attack can do, which is ground flights worldwide. Whereas if you are a tradesman, or you are a school, then the impact isn't nearly as great. But there are still risks, because not all cyber attacks are ransomware attacks on your computer system. Some of them are phishing attacks, or what they call business email compromises, that essentially the attackers intercept communications between you and a supplier, and they trick you into depositing money into their account. And whether you're a tradesman or a school, that can impact you. And that financial loss might be just as devastating to you and your business as an airline having its flights grounded for 4 hours.
So if a flight can be grounded for 4 hours, I mean, that's obviously the best scenario, right? I mean, once these cyber attacks get even more sophisticated, it kind of blows your mind what could happen in the air.
Well, yeah. So there I'm out of my depth, so I can't speak to the kind of cybersecurity that's in place on aircraft themselves. I would imagine the aircraft itself is actually quite secure. Your problem is if something on the ground, like something with the instrument landing system or something like that, can be compromised without you knowing that it's compromised,
which could affect you in the air.
Exactly, right. So these and obviously, for a company like MTN or Vodacom here in South Africa, or the banks, or any of these hyper-connected industries, or let's call them infrastructure level industries that are essential for our day-to-day living, the impact of a cyber attack can be devastating. Then let's not even talk about Eskom.
No. All right, let's go back to the MTN cyber attack. Remind us of what happened and what global trend is highlighted by this type of attack.
Yeah, unfortunately, we don't know much about the attack. So MTN hasn't disclosed much details, and so we don't even know in which countries people are affected. So if you are an affected MTN customer, you should have received some kind of notification from them, an SMS or an email, letting you know what exactly of yours they have found to be compromised. So this, unfortunately, the thing with an attack like this is it takes a while to determine exactly how much the attackers got away with, and potentially even how much damage they did. Did they leave a backdoor in your system? And so it's something that has to be tackled incredibly carefully. And so this was MTN. It's unfortunate because you have to weigh up spreading panic versus letting people know so they can take appropriate action.
And their concern is getting personal data, right?
Yeah, exactly. And so now every MTN customer is kind of going, okay, but is my personal data out there? What of my personal data is out there? And so MTN has said what it is not, and it's said that it doesn't appear to be financial data or anything like that, but customers then should be on the lookout for an increase in potentially phishing attacks or spear phishing attacks, where an attacker tries to come after you. Like a SIM swap is a particularly obvious example there.
Yep.
Because if they can do a SIM swap on you, then they can potentially get into your bank accounts, they can get into your Google accounts, they can get into your WhatsApp. So that's something to watch out for if you're an MTN customer currently.
So how does cybercrime rank as a threat to business compared to, say, load shedding and political instability?
So what's interesting is in South Africa, it used to be that load shedding was the key threat and the key risk to mitigate. And it got to a stage in 2022 and I think 2023 where essentially the American embassy had invited a speaker over. I can't identify her because the information was leaked to me. And so she was speaking to American businesses in South Africa and telling them, hey, listen, you should probably be making provision for total blackouts. And those risks have been receding mercifully. So the folks at Eskom have been doing a good job in getting the power system under control. We're not out of the woods yet by a long shot, but the threat of a total blackout I don't think is looming as much as it was. And so cybercrime has overtaken load shedding as a primary risk, according to Allianz in South Africa. So, I think reasonable people can disagree about that, but certainly the prevalence of cybercrime in South Africa is something to take note of. And I mean, I've reported on everything from milk farms through to banks now that have had, or credit bureaus, I should say, that have had some sort of security vulnerability in their systems that had to be addressed. So,
and the problem is most of the time
these impacts are wide-ranging.
We don't really know who's behind it.
Yes, and so what happens with a ransomware attack is usually the attacker identifies themselves, not in their real name, but some kind of pseudonym. So then they go, okay, we're Lockbit, and we have all your stuff, and if you don't want us to leak it, you have to pay us money. Or we are Ransom Hub, and then because there are expert cybersecurity researchers out there whose job it is to try and work out who these threat actors are, there is some information known about who these groups are. Some of them are state-sponsored, Russian, North Korean, who are hacking for profit, essentially generating income for the state. And some of them are just loose-knit groups that are, doing drive-by attacks to try and make money for themselves. So the attackers come in all shapes and sizes.
Briefly, if you will, what should businesses be doing? What should they be putting in place?
Definitely, if you haven't done some sort of risk assessment, that needs to happen. If you haven't looked at some kind of mitigation or some kind of response, there are professionals out there, penetration testers as well, and people who specialize in cyber attack response. And so if your business is something that can be, can be devastatingly impacted by something like this, that is absolutely something you need to look at. At the very least, some kind of response plan. If you get attacked by ransomware and all of your data gets encrypted, how do you recover? Do you have backups? Do you have off-site backups? Et cetera, et cetera. Those are the kinds of things that people need to look at. And you don't have to bring those capabilities in-house. I mean, if you're a plumber, then that's silly, and you've got a website. That's silly. But if you're a large national, electrical or plumbing organization, then and you use cloud-based systems, then you might need to start looking at the kind of professionals who can ensure that your cloud environment is safe.
Jan van Meerden, thank you very much, talking to us about this ominous trend, this rise in cybercrime and what we should do to protect ourselves. Jan is editor at My Broadband.
The Money Show.
Business books.
All right, we're going to be talking about a book, The Real Wealth of Nations, Creating a Caring Economics paperback by Rian Eisler. The book explores the concept of wealth beyond financial measures, advocating for an economic system that prioritizes human well-being and social equality over profit maximization. Our guest, Bronwyn Williams, trend translator and future finance specialist at Flux Trends. A very good evening to you.
Hello, good evening.
What did you learn about creating a caring economics?
Well, this is an interesting book. It's not particularly new, so it's kind of interesting to look back into where the conversation around caring economics has come from the early 2000s or the early noughties until to date. But it's a topical conversation to refer to, given that there is so much discourse at the moment around the care economy, and particularly in quantifying the care economy, which is rightly so, as I certainly personally believe, a controversial topic. It's controversial because essentially this is an argument to quantify the value of things that are currently invaluable. Things like care and love and support, things that are, let's be frank, also commonly part of the feminine domain in the remains of our kind of Western society as it is today. So it touches on issues of feminism, it touches on issues of gender equality, it touches on issues of overall equality, given the rising inequality both internationally and internationally in most parts of the world at the moment. And it opens up questions as to whether we should be accounting in our GDP figures, in our company accounts, in our family economics, the current hours of effort certain family members, usually women, put in to the running not just of homes and households, but also the running of the economy. Or if conversely, that perhaps some of the ills that we see in our current economic models have come from attempts to quantify and price things that should have never been quantified and priced in the first place. So is this a solution?
Do you think this is why we've got away with it for so long, because it is so hard to quantify?
Yeah, that's part of it, but also there's things that perhaps shouldn't be quantified. We can use examples here from the realm of dating and mating. This is an early attempt to quantify care, to price care work. We can look back at the so-called oldest profession in the world, right? Mm-hmm. We can look back, of course, at the flesh trade, which was early attempts to quantify a service that should have been mutually beneficial in the first place. So by sort of pitting parties of cared and the carer against each other, we do kind of drive wedges into society. But that's kind of a philosophical debate. And this is kind of the backstory as to why these kinds of ideas have had pushback in the past and why they're so difficult to say whether this is a good or a bad thing. But anyway, this particular book, The Real Wealth of Nations, goes quite far to trying to quantify what parts of our care economy should be quantified and accounted for in our metrics, given, of course, that what is measured is managed for better or for worse. And also it goes into some of the details as to how quantifying the care economy, ironically, could actually be good for business too. Citing examples of how companies that invest or incentivize women to go to work rather than stay at home with their families get more work out of those women. Again, the sort of downstream effects, whether this is in fact good or net bad for society, cuts to the heart of a lot of the arguments splitting apart our global politics across both left-right political divides, but also across male-female divides, as we see more and more young men tending more right-wing and conservative, as opposed to young women going more liberal and left-leaning. At the same time, we see the pushback in, say, the United States, but we see echoes of this all across the world, of the rise of the so-called trad wife, a sort of pushback against this notion that women's worth comes from their earning power in the workplace. So you see why this becomes such a sticky, tricky issue, right? Depending on how you look at it, you can end up defending the indefensible even from your own intrinsic political perspective.
Okay, I'm going to talk a little bit more about the Trump administration, obviously, but I'd like you to paint.
I gave you an opening.
Yes, I'd like to paint a picture and just tell me if this is correct of how it should look if it's working well. In a fashion. I've just come back from Costa Rica and they've got a lot of care for the environment and so many people benefit off the back of it. It's very inclusive and, it brings money into the communities. They talk to the communities about how the environment will work and how to improve it in order to improve their lives. Is that a sort of model we should be looking at? Do they tick some of the boxes there?
Kind of, right? I suppose any of these models are going to support someone as opposed to supporting someone else. It all kind of depends on the aims and the objectives that each of us want to follow, which is another one of the kind of issues picked up in this book, that so much of our economic models are premised on the idea that we are sort of self-seeking beings as human beings, that we act within our own interests. And this is how we come up with things like the invisible hand and the way that markets work. But of course, also the fact that we have to pay each other to be nice or to care for each other is kind of almost reinforcing those same notions that tend to be attacked by texts like this. So these are not easy problems to solve. They really come back down to something that I've been looking at certainly in my work for the last few months. There's difference between values and the price of values, right? Like when you have to sort of pay for your values as opposed to when you just have values in theory. And a lot of what we're seeing in the world right now with our politics, with our trade wars, with the insane tariffs that are going on, is getting to the crux of this, the fact that it's showing up which of our values are fragile and which of them are worth fighting or paying for, right?
I mean, what's frightening is
like at the heart of a lot of this.
is seeing how many people jump onto somebody like Trump and what he's saying. I mean, it seems to go in the opposite direction of caring economics.
Yeah, exactly. A revealed preference doesn't always expose us to be the people that we thought we were or the people that we want other people to be either, right? But it is important to note that Trump was elected in the US, right? And he was elected with a stronger bias than he was the last time around. And that certainly should tell us something about people's real values as opposed to their professed values, which is a mistake that many pollsters have made many, many times before, taking people on their word as opposed to on their actions.
So would he fall into the flawed economic model, or is that all to be revealed?
Well, it depends. Well, whether an economic model is flawed or not, again, you'd have to come down to the issues around the differences that we have about economics. There is, of course, normative economics and positive economics, and a lot of economics falls onto the normative side, which is really just describing, like we've just done now, people's revealed behavior, and then trying to make predictions based on their past actions, right? If people have done this in the past based on this incentive, then they're likely to do something like that in the future. And the other part of economics is, of course, the positive side, where we start to, or it's the other way around. Sorry, I'm talking absolute nonsense. The positive is of course the revealed preference and the reality of the world, and the normative is where economics is designed to nudge us in a particular way. So it's, in other words, it's policy projections or ideas. And that's really what this book is getting into. It's looking at that more kind of normative side of economics, the sorts of values that we promote through the incentives that we put out, the incentives being things like taxes and tariffs and all the rest of it. What behavior does that encourage? What does that encourage us to value or devalue? And of course, all of that kind of ties together, like what we should be doing, what we shouldn't be doing, is a different question. And this book is saying perhaps we should be doing things differently, and that if we valued different parts of our economy like care as much as we value things like finance and warfare and defense and military spending, then perhaps we might get a bit of a different world.
It seems that we've got to learn. It seems that we've got to learn to be nice, right? I mean, should these sort of messages be passed on to children at schools? They've got to learn to care.
Exactly. And that is the other question, whether we can trick people into caring through changing economic models and measures and incentives, or if we have to do exactly what you're saying, go back to school and go back to our homes and make sure that we have the right values first before we start trying to play pricing games. And these are the sorts of questions hopefully readers will get as they go through these texts that are presenting an argument that we're not necessarily putting the right incentives in place and that we don't have the right measures in place to nudge our economies towards more care and away from less uncaringness.
And greed and avarice are our greatest threats, I should imagine. What role does resources play in all of this?
Yeah, that's another point. This is talks about, of course, resources are fundamental to basic economics, which is all about supply and demand. And resources obviously mean the more resources that you have, then if you've got an abundance of resources, then you might have a lower price for things. And if things are more scarce, you're going to have a higher price. That's sort of basic economics 101. And in this particular book, the author makes quite a lot of argument around artificial scarcity, which is, again, something I also raise an eyebrow to against, talking about how, again, pricing mechanics and availability to things like childcare have a fundamental impact on the way that resources are therefore priced and distributed. And saying that artificial scarcity can, of course, manipulate prices too. But that's getting a little bit into the weeds, but she's basically interrogating a whole lot of the assumptions or kind of first principles of modern economics. And it's a great starting point to start interrogating some of these things that we take for granted, and to challenge the sorts of incentives that we respond to.
I think sadly we're going to have to leave it there. Bronwyn Williams, trend translator and future finance specialist at Flux Trends. Thank you very much for your thoughts and talking us through the book, The Real Wealth of Nation Economics. Ryan Eisler.
Walking this talk together.
Every hour.
Every day. This is 702.
Let's walk the talk.
Ain't no mountain high enough. Ain't no valley low enough. Ain't no river wide enough to keep me from getting to you, baby. Remember the day I said you.
You know, some people just take songs just too literally. That's Marvin Gaye singing Ain't No Mountain High Enough. The next guest, well, she climbed up a mountain that was probably too high for the majority of us. Our guest is Saray Khumalo, explorer and mountaineer, and you climbed some of the toughest mountains in the world. You climbed Mount Everest. Did that song push you to the top? What drove you to the top?
I Can't Give Up by Mary Mary was my song on Everest.
Oh, really?
Yeah. It was, it had been, I had 3 failed attempts. So the fourth time, I just had to put one foot next to the other. But yeah, I love the song that you just played, though.
I mean, so you're an explorer, a mountaineer. You've got an illustrious career. You've got a fantastic philosophy towards investing and saving money. That's why we're going to be speaking to you about how I make my money today. I want to stick with Mount Everest for a little bit. Does life look a little bit dull after you've done something like that?
When you come down, immediately after you come down, you try and look at, so what's next?
Yeah.
You know, and a lot of things, you come into a different perspective compared to when you went up. Yeah. Things that seemed so insurmountable suddenly seem like, what was that all about? You know, and also for me as a Christian, it humbled me in a way that I realized how much really of a speck we are in the bigger scheme of things. But at the same time, it could be dangerous because you think that anything is possible. So you just jump into the fire. It's like,
it is dangerous. It's extremely dangerous what you did.
It is. Life is dangerous. Think about it. I mean, you know, I know people say people die on Everest, people die on N1, people die at home. So death is the fate of us all. The question is, are you going to stop living because you're afraid of dying? You know, I love it. It humbles me. It makes me feel alive, and I found me on the trail. So I'll do it because I love doing it. It's a problem when you do it because of anything other than what is intrinsically true to you. If you're doing it because of other people, then there's a problem. But if you do it because you love it, whether someone is watching or not, then you're on the right path. And it doesn't have to be Everest, it's anything.
I'm just reminding if anyone's out there who wants to ask you a question, Saray Khumalo, you can call us on 011-883-0702. You can also send us a WhatsApp on 072-702-1702 if you've climbed up Mount Everest. Now, as you said, you tried 3 times, you failed. Yeah. What did that failure teach you, and how do you live by that?
It taught me, first of all, it humbled me because I'm an overachiever, as you probably could have guessed. So you get there and you realize that flip. I can't do these things on my own. You need other people. And now my philosophy is nobody gets to the top on their own, but not everybody can be your partner. It's being very guarded and intentional about the people that you surround yourself with, because it's not everyone, even the Sherpas, not every Sherpa will take you to the top of the mountain. And I use that in my life today. But it's also realizing that it's only a failure when I don't learn from it. Because I don't believe for 1 second that 2019 summit was a success in isolation of all the 3 other attempts. Every one of them, I took something out of that made 2019 possible, apart from the fact that it was the right time. The other thing that humbled me about the mountain is there's lots of egos on Everest.
I can imagine.
It's realizing that when the avalanche comes, it doesn't discriminate. Are you a girl? Are you white? Are you black? Are you a mother? Are you not? It will sweep everybody off the mountain. So it's just standing into your own and believing that you deserve to be there. You deserve to take the next step just like anybody else. Something which they made me feel like I didn't belong, especially with my first attempt. And subsequently I realized that now I belong where I want to be. And I'm not going to let anybody make me feel like, I'm a guest.
You shouldn't be there.
Space. I shouldn't be there. No.
How has this impacted your philosophy when it comes to money and investing and pushing ideas and going for what you want?
It's in many ways. The first thing is diversification. It's not. You don't climb Everest with limited oxygen, as an example. I mean, if you've been exposed to my book, you know that I always got extra tanks. They'll say we need 4, I would get 6.
Smart.
It's also understanding that there's not one way to get there, but there's only one summit. So I have a financial goal. This is what I need. It's financial freedom. How I get there, I do many things. I for example, this is the main income stream. I'm actually going to do something in real estate. So it's really helped me in a way more so than before I got exposed to mountaineering. To believe that there is not just one way to get there. The more I diversify, the quicker I get there. If one stream is slowing down, it doesn't mean the end of the world, because something else is giving me that half a step that I need in that moment. It's also helped me with resilience, to a greater extent.
You are the founder of Summits with a Purpose, going back to that mountain,
Correct.
An initiative that has raised funds and built physical and digital libraries in disadvantaged African schools. Tell us more about that.
So Summits with a Purpose is an initiative that I started. When I first climbed Kili, we raised money for a home in Benoni, and which was just like friends putting something together, and a child in that home said to me, "Do you really come from the township?" And that triggered something where I looked at her and I remembered also growing up and thinking, having a sense of self-disbelief. But one of the things that changed my perspective is education and travel. You realize that we are all the same. They are not any cleverer just because coming to America said they were, and I'm not, right? And I decided that education and travel are the two things that changed how I look at the world, and believing that I too belong on top of the world. And so I'm going to use my climbs to raise money for education. And I started doing that. I would pay for my own climbs, but I'll ask corporates, friends to help me raise money, and I'll build libraries or anything that has to do with education. And in the process, now that I work for myself, part of my profits in everything that I do goes to Summits with a Purpose, which is now an NPC, and I use it to build the libraries, because I'm very cognizant of the fact that I will not climb forever. But how can I still be able to impact education for the next generation of Africans. And that's the one thing that I'm very passionate about. It's about giving back. I think we all need, it's about Ubuntu, which we all know so much about, talk so much about, and sometimes we're not sure how to do it beyond what we've heard about or beyond our nuclear families.
And how important, and this is maybe a rhetorical question, how important is it to use your own money, how little you have or how much you have, in improving other people's lives? I mean, obviously you will make a dynamic impact on their lives, but it must make you feel fantastic.
Absolutely. People say, oh, you do so much. What they don't realize is how much more that does for me as an individual. I always talk to some business people and I say, you know, doing good is good for business. It's profitable, doing good, because people would support you because they like you, because they know that you're plowing it back. They know that their money is going to do extra than if they give it to company B. But for me as an individual, it's one way that I know I'm living my world just a little bit better. And the person that I'm impacting, they don't have to say thank you. But I know that I've done my bit, and I just didn't come and pass through and live the world how I found it. And that for me is big.
Okay, we're going to take a little break now, but I want to talk to you about financial well-being and your relationship with money and how we should be viewing money in our lives.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
Saray Khumalo is an explorer, mountaineer, our guest. You've had roles at F&B Rewards Program, New Development Manager at F&B, Divisional Manager at Discovery Vitality, and recently Head of Partner Rewards and E-commerce at Momentum Multiply. And I'm going to get onto those the loyalty card game, but I want to find out from you, first of all, what's been your best purchase, something that you spent money on that you really cherish?
Oh, wow. I'm investing in my expeditions. I think it's one thing that not everybody understands, but it's just liberated me so much. Experiences more than anything.
That sounds like having a good financial well-being. How do you achieve that? Other than, what would your advice be to others?
I think invest in things that add value to your life, things that you look back and you say, I don't regret that. I'll do that over again. I'll do it twice, because it enriches you beyond, sometimes beyond what others can see. I think for me, the other important thing, especially where I'm at in my life now, is not about how much I'm accumulating for myself, but how much I'm accumulating and able to impact somebody else. In the process, and that's why Summit with a Purpose is something that I'm really passionate about.
Do you keep an emergency reserve? Have you ever had one?
All the time.
I interviewed somebody some years ago, and she was with an abusive husband, and she kept 50 Rand aside, and it was enough for her to get out of the house. And I just thought, God, that's such a profound thing to do, right? We should all have one.
Yeah, we should all have one. No, I always keep reserves. The other thing that I've done for years, I suppose, also when you do an undergrad in accounting, is budgeting. It's just such a game changer. And also paying myself first. So, yes, I have a mortgage, I have whatever, but I pay me first before I pay all those other. And by paying me first is like I'm investing in something. I'm more important than everyone else that I owe, if I do owe anyone. So I pay me first, and that can be different things to different people. It can be your tithing, whatever it is that's important. So I put that aside, and then what else do I need to pay for, become secondary.
But that's a good thing to do, isn't it? Then you've got your financial stability. I mean, there's nothing worse than having financial stress, is there?
No, there isn't.
It's toxic.
One interesting thing that, I've left corporate. I don't know if you know that. One of the things that I did is I took early retirement, but I made a decision that I'm not going to take any of my money, because I'll take it when I'm 65, because that's when it's kind of owed to me in a way, right? And if I'm not able to sustain myself using this entrepreneurial route that I've decided on, the way that I did when I was in corporate, then I have no business working for myself. I need to go back there. And I haven't looked back. I guess it's a level of taking risks. Because the pension money I was putting aside was for me. It wasn't for me to go and play around with. And that's how I look at it. And that's kind of my money. And everything else that I'm building now is stuff that I'm able to support my kids. I'm able to give back when I need to. But it's worked fine.
And is there enough money from you for you? And what does that look like?
Whoa, I don't have to worry about where the next meal is coming from. For me, at least, that's what it looks like. I don't have to worry about, can I pay my kids fees if I need to. It's enough for me to do what I need to do within reason. Is it enough for me to go and climb Everest again? Maybe not. But
I think you've done it. That's fine. There are lots of other mountains to climb. Tell me something.
Exactly.
When you see kids and what they're buying on TikTok, for example, buying stuff that they don't need, how do we stop that?
I think we stop it by giving an example. I mean, when you say that, the first time I went to Everest was 2014. The revelation for me was realizing that everything I needed for the mountain, and it takes 2 months, the months of April and May, I carried in my backpack and in my duffel bags. When I came back, I was like, what is all this in my house? That's the year I stopped changing cars all the time. Then I want a big house. I became almost minimalistic in my approach. And I think it's important as parents, if you're living a life where you've got cards that you're struggling to sustain, then we're not teaching the kids the right stuff.
Absolutely. I mean, I obviously didn't climb the mountain that you did, but I remember years ago walking through Austria with my parents, and we stayed, it was in summer, and we stayed where the cows are kept during winter. And it was the first time I realized that actually, I mean, I think I wore the same clothes every single day. And we cleaned ourselves by using the cold water, coming down the mountains. You realize, gosh, there really is very little that we need.
Exactly. The other thing, I don't know whether it's the right thing to do or not, is, I have 2 boys. I budget and I speak to them about stuff. Why do you need that? And how are you going to save up for it? If I'm giving you more than I need to, when are you paying me back?
Yeah.
And I think in a way it's also teaching the next generation about how to be responsible with money. Do you really need that next phone? Do you realize that if the new one comes out, that one will be so much cheaper? And I pray that when they grow up, that they take something from that. Obviously they've got their own minds. They can do different things, but at least they wouldn't have learned it from me.
I was speaking to someone a little earlier about real estate and how relatively stable the commercial real estate sector is. You touched on property. Do you believe in investing in property?
I do. My mom did, and so do I. I believe very strongly.
Why?
Obviously, your primary residence, because it's a lot more stable. That's one. 2, if you buy right, it increases it appreciates. Obviously, you may buy in the wrong area and you make a wrong decision. It's not about buying and selling quickly. It's something that can stay. It's a lot more stable and less volatile than some of the investment plans that are available, in my mind. And also you can have regular income as well, depending on what you're using it for, yeah.
But you've got to get it right, otherwise it could be quite a drain, right?
Absolutely. And you've got to buy right. There's a time a few years ago that I used to, I was still married then, we used to buy off-plan.
Yes.
Because people can't see a property before it's actually built. So you buy off-plan quite cheaply, and then they finish building, and somebody comes and says, wow, now they see it. They're able to visualize because it's there.
Yeah.
And you make easy money, you sell it to them, and you move on. But that was a different era, and a lot has changed.
Yeah, it really has, hasn't
then
it?
and now. It has.
And how do you feel about, I know that the cryptocurrency world is waiting for the Federal Reserve to make some sort of announcement that's going to make the cryptocurrency market boom. How do you feel about that? Is that something that you would dabble in?
So I haven't dabbled in cryptocurrency. I know of it. I'm watching from aside. I wish I did buy Bitcoins when it came. I know we looked into it. Now I see some friends are mining it. But, there's always, I feel that it's been on the sidelines for so long that, it's not, there's not too much control, that if it comes into the mainstream, a lot could potentially change. For the positive or for the negative, there's a lot of uncertainties, but it's not something that I'm very familiar with.
And briefly, if you will, a word of advice for people who want to make money and make it sustainable and feel good about themselves. Yeah,
I think be realistic, and try and, I could say pay yourself first. And by that is that invest in yourself, not just in you being a lot more with a marketable or a lot more productive, but it's also putting money aside.
Saray Khumalo, we're going to have to leave it there. Wonderful talking to you. Thank you.
Thank you. Thank you so much. Bye.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking. ABSA is a proud lead sponsor of B20 South Africa 2025.
I'm Jane Dutton. It's been wonderful being with you.